And we're live. Joe, how are you?
Good, Al. How are you?
Good. Hey, everyone. You're here again. Episode of Real Talk with our mortgage expert, Joe Trimboli with the Mortgage Center. Did I say that right? Joe Trimboli? Is that
Yes,
right?
sir. Hi, everybody.
It's been a couple of weeks since we last spoke to Joe, so I wanted to kind of circle back. A lot of things are changing really quickly in the real estate scene, and financing being a big part of that. So I want to thank Joe for taking a minute to chat with us here. Thank you so much, Joe.
My pleasure. Thanks for having me on.
No problem. So the last time we spoke, kind of the hot topic was the mortgage deferral program. So it's been a few weeks. Just wanted to kind of get your insight on how that's evolved, what it looks like, and what people should think about when they consider it.
Yeah, I think any misconceptions or misunderstandings have kind of been ironed out. People understand that it's not a free or a vacation from your mortgage payments. You do have to pay for it. You are paying interest. That interest gets added to what you owe on your mortgage, and depending on the lender, you're paying it back either within the term, which means your payments are going to go up when they resume again, or onto the amortization, where that money is added. Those missed payments are added to the principal of the mortgage. Mm-hmm. So I think with the understanding comes now the more opportunity for people to look and say, do I really need to do this, right?
Sure.
So the banks have been able to weather the storm. They're not getting as many calls as they used to. So you should be able to get answers rather quickly now. There are a lot of the banks have set up internet or websites where you can actually apply. Like Scotia has a site, it's just 3 questions, right? So, right. But a lot of the things that, when these things do come up, things aren't well thought out. So things like, how does it affect your credit? The missed mortgage payments, does that show up on your credit bureau? And the answer is, unfortunately, right now, it looks like the answer is yeah.
So by opting into that program, you're actually missing mortgage payments as far as your credit scores are concerned.
Right. Now, if I had to guess, and again, because we innovate during these times, right? So Sure. You just forced to have to figure things out as they come up. So it's probably not something that they considered in advance, but now that it's come up, I think it's only fair to say I would expect either Equifax or the banks themselves to say, okay, any missed payments within this period of time can be forgiven. And hopefully Equifax does it where they can actually show that there wasn't never a missed payment or an effect on credit score. I haven't heard what they have to say about that just yet. I don't think they've come out with any formal statement. Yeah. But I think, when you use discretion when reading a credit bureau, it's understandable, right? Like pretty much the whole world was affected during this time. So
yeah, absolutely. But it is interesting, right?
It causes a headache at the end of the day, too.
Yeah, and in the short term, at least, that could prove to be a bit of a turbulent scenario for those people affected.
Yeah, well, I'll tell you, like when you're applying for a mortgage with some lenders, a missed mortgage payment basically makes you inadmissible to any mortgage institute unless you're willing to pay B rates, right? Yeah. The other thing is the credit score. If that missed payment affects your credit score,
which probably will.
Probably will, yeah, absolutely. And unless again Equifax does something where they forgive those missed mortgage payments during this time where it doesn't affect the credit score. But in the meantime, if it is affecting credit scores, we're in a risk-based pricing type of environment with banks. So a lot of the pricing or rates that you're eligible to get have to do with how well your credit score is. Right. So you will lose the opportunity to get the best rate because this credit score was reduced as a result of having deferred your mortgage.
Interesting.
So I think it's a solution for those that really need it. And I think at first people just thought, yeah, I'll take advantage of it. But now I think people are really starting to come to terms with, well, if I don't need it, I better not take it.
Yeah, well, I mean, it does seem like an unfortunate reality, especially since the government is essentially giving us our money back to use, right? So let's hope that with the long term, things get ironed out. But, definitely to everyone listening, be advised that if you're looking to make any real estate transactions in the next few months, be wary of taking advantage of that offering, because we don't know how that's going to impact things or how lenders or underwriters are going to kind of perceive them. Is that safe to say?
Yeah, absolutely. Like there's people that are asking me about refinancing,
Yeah.
and asking me that, like, that's an important note, Al.
Yeah.
There's people that want to defer their mortgage payments, but they're also looking to refinance. Well, why would the bank lend you more money if you're already displaying signs that you're, struggling as it is? So
Yeah.
absolutely something to think about.
Yeah, good stuff. No, it's really helpful. It's, that's a pretty critical element to that offering that I hope people pick up on. Another thing I wanted to touch on was your business practices and how they've been impacted by everything. How's your business adapting to the social distancing and how you kind of process things?
Well, I was already pretty much virtual from years back, just because I think clients really enjoy the benefits of working with brokers in that we don't need you to be sitting with us when you
Mhm.
sign.
Right.
We sign, a lot of our clients prefer to sign virtually. So we've already been sort of social distancing, so to speak.
Yeah.
But what we're seeing now is appraisers and other industry providers having to come on board with their processes, banks that allow for virtual signings, lawyers that are able to now sign maybe virtually or remotely, so to speak, versus
Right.
having to sit in their office. So the rest of the world has caught up in terms of offering that. The bank has, made exceptions or made the changes. A lot of the times they would not advance funds unless they know that you sat with a lawyer and the lawyer was able to verify your identity sitting right in front of them. So
Right.
personally, nothing's really changed except that I'm working from home a lot more.
Yeah.
But in the industry itself, everybody's adapted. Appraisers are working with the vendor or the borrower, where so that's another area. The banks have also eased up on their appraisal requirements. So more appraisals are being waived, or more desktop or drive-by appraisals are being accepted.
More of like a hands-off appraisal.
Yeah, just like getting the data. If a full appraisal is required, these appraisal companies now have put measures in place where they'll work with the homeowner to either send pictures of the rooms in the house, or get on a FaceTime call or a Zoom call and walk through the house in that way, so that they can fully consider all aspects of the property, any improvements or anything like that. So everybody's gone virtual. It's business as usual in terms of being able to do the business.
Awesome.
So, yeah.
And just to wrap up, we've seen in the last couple of weeks, fixed mortgage rates had gone up. Even though we saw some cuts on the prime lending rate, what's your kind of short-term outlook on things as of today?
I think it's going to be more of the same. I think prime will stay fairly, low. I don't think there's any opportunity for it to go up. Whenever there's uncertainty and volatility, like to this extent, short-term rates have to stay low to try to keep the economy going. And it passes on, from one sector to the next. So I don't have any concern with prime going up. In terms of mortgage rates, we're getting a lot of more positive news, or news on the more positive side. And I think maybe investors are starting to get a little more, or less afraid anyways.
Yeah, a little more confident.
So I wouldn't be surprised if we see some fixed mortgage rates come down a bit.
Because they shot up pretty quick. Nothing
Yeah,
huge,
well,
but we
there
saw.
was an immediate reaction to the market, right? Like,
Mm,
pandemonium.
sure.
So I think now things will kind of taper off, level off. They might even come down a little bit, but I think it's gonna be pretty steady
Mm-hmm.
until things change again, right?
Awesome. Well, listen, is there anything else we missed? Anything you want to touch on?
No, man. You know what? I think in talking to you and you asking the questions that you ask, working with your clients, and this is why I love working with guys like you. It's sort of like having a good doctor, right? Everybody says I have a good doctor. My doctor is the best. Well, you don't know how good your doctor is until something goes wrong,
Yeah.
right? You don't know how good your realtor or mortgage broker or lawyer are
Mm,
until something goes wrong. And like now is a time where we need guys like you that ask the questions, that inform us, give us the information so we can make our own decisions at the end of the day, and try to play a very proactive role in what we do, right? It's not just about negotiating an offer or showing houses. You go way above that. So Anyways, it's really
Hey
cool
man,
to
well
be on the
listen,
phone, man.
I couldn't do it without my business partners. I lean on you and all the others very heavily, and I appreciate you making the time. Again, guys, Joe Trimboli with the Mortgage Center. I'll
Thanks
have
for having me
his
on.
no problem. I'll have his contact information down at the bottom. Any questions, you reach out to Joe directly. Thanks, Joe.
Thanks, Sal.
Cheers, bud.